All right, today is February 8th. Markets closed, and I thought I'd do a quick recap on today's price action. Um, Today is so similar to December, I think it's was it December 13th or December 15th? I think it was December 15th. Oh, they actually do look very similar. So this is December 15th price action. Um, and December, no, that's 13th. It's the 15th. In fact, it's 15th is actually has a lot more in it that is very similar. So you can imagine you had the spike, or you had the spike the night the day before, two-legged correction, two-leg correction, and then you had a wedge formed, a breakout below, a breakout below. Actually, you didn't actually have that here. You had the wedge form here, the breakout was here, but you had a two-legged correction here, and another two-legged, a more complex two-legged correction here, which led into a trading range. Excuse me. And then we had a trading range. So um, it was, yeah, pretty straightforward. However, it was almost coming. You could almost see that happening. You have a wedge top on. This is the daily chart and the ETH of the daily chart. You have a wedge top, three pushes up. Obviously, some profit taking here. It's also a light, small double top, a bigger double top here after two legs up. And so therefore you're definitely going to get some profit taken here and possibly some bears attempting to sell this. All right, so the first attempt, obviously you're in minor. This is 2 days. We pushed back really strongly yesterday, have a lower high, and possibly this is a very good sell signal for the bears tomorrow. So we might, if the bears are able to get below this bar, we might get a bear trend breaking the moving average. It's also a very weak bear channel or a bull flag, so chances are they could get that and they might touch this moving average and find some buyers there, which is why what's happening here was actually very crucial to what will happen tomorrow. And the fact that the bears were able to get a close very close to the low of the range gives you an idea of the intensity of the selling. All right, so how was today? I couldn't trade most of today. I missed all this. And yeah, and then I was distracted doing some other things. However, I just thought I'd just talk about what I actually did because I had to go to the dentist. Because yeah, I had to go to the dentist. I really just wanted to see if I could get 10 points at the open. I bought this bar and got 10 points on this. And the reason why I bought this was just because if you think about it, you have a support over here, and also if you look at this tick chart, you had a wedge forming, and then you open here, you have the bottom of the wedge, a beautiful signal. At least you can try and see if we can get two legs up. I actually thought we were gonna take this pull back and try and get higher, so therefore we were gonna continue the trend, which is actually a bit weird because normally that doesn't really happen. You need for a high probability buy. I mean, the trend is already gone on for so long, so you need to sort of correct at least with two legs. So it's a low probability that we were going to take this high out. Not impossible, but it wasn't actually happening. Anyway, so I bought that, got out there for my target, and I went out for to see the dentist. I got back. I noticed that we had tried twice. We had a double top, and I think at this point I now realize the influence of this breakout. So therefore, this was going to get a second leg. Obviously, a double top, failed breakout of the moving average. I actually put that in my recap, my journal, which I normally post on my Instagram. So you think of it this way. So you have, excuse me, whoops, mistake there. All right, so you have a failed breakout um, of the moving average, a high and high double top, failed breakout of the moving average, two bear bars closing on their lows. Anything below that is a sell to close. So this is another breakout. So this is a good entry sell. But I didn't. Obviously, I was not there to take that. That now went down. I sold this low, and I think it was when my colleague alerted me to the fact that the gaps were closing. So, for instance, now you can imagine this low, right? And then you now made a gap. You have a bull bar here, close this gap. Came down here, this bull bar closed this gap. It then just, it was at that point I realized that, oh shoot, this is not a good sell. First, we're too far from the extended moving average. The gaps are closing, so they are going to close this gap again. So therefore, price is probably going to get back up here. Anyway, I held on to my shorts, sold this high because this is a micro wedge, 3 pushes. You can almost see like tails at the top, so you know that this is a micro wedge. If it's a bear trend, you can sell the strong bear bars. So I sold that and got out here for a small profit. And then what else did I do now? Then I kind of watched this. I saw that this wedge failed to reverse. At that point, I realized we're gonna get 2 legs up. First leg, pull back. Second leg. And if that was the case, we're probably going to go into a trading range and we probably will not go too far down. And only just because the bulls are able to put a lot of bars above the moving average. This is a gap bar, sell. You have a gap between the moving average and price in a very strong bear trend. So the first bear bar will probably be sold. This was a bear bar, could have been sold. You can see there were sellers here, did not take that high out. And you had a bear breakout below the wedge going down. This is actually a measured move. So this, if I just actually go here, this, if you notice this to the where they got out, break even. So this range to this high here is a measured move of that. I don't really know how I would sort of see that prior, but the idea really is that if you think about it from the perspective of a bull who bought this close, he has to buy again to get out break even. So he probably either bought this close, and if he did, he got out round about there. Well, he didn't actually get out, so he would have to buy again. But those bulls who bought here, they got out around here, which is exactly why you have that. At least my understanding is why you would have that resistance over there. And usually this happens a lot in trends, bear trends, where you find that the bulls are buying the bottom of wedges, especially if they bought high up here. You have to buy lower again just to get out, and that usually causes this, where you get this sort of very strong sell off as a result. The problem with this sell off again is because you're in a trading range, you're probably going to go down with 3 pushes as you've done, 1, 2, and 3, and therefore you're going to get some profit taking here. It's a failed breakout, therefore we have some sideways. However, the sideways, you should expect a stronger push up, but very bad buying pressure, very little buying pressure. I actually took a few shorts in here, just scalped it. Wasn't betting that we're going to break out only because of this move. So therefore I just kind of stopped trading, and the red dot shows up then. I don't usually take trades after that. And then you now had this sort of weak bull rally. My thoughts, we have a very strong first leg, a sideways, and we're going to get a second leg down. Hourly chart, you can see what's happened here. We had sideways here, formed a trading range, and then I just kind of did a measured move based on the size of the trading range in here to here. So therefore this was technically the bear target for today, this level. Alright, so yeah, that's my recap. Oh yeah, there was also some other things as well. I think I was very convinced about selling here only just because of the number of bear bars that we had here. I took a sell here, obviously my stop was up here. I probably would have sold this here as well, probably gotten out here for break even, especially if you see a bull bar. Let me actually look at that. So say I sold this close and then I sold here again, sold below this bar. Yeah, I definitely would have gone break even, but then seeing this would have made me stop out. I mean, I say that now, it's different when you actually are trading. Alright, anyway, so yeah, I just thought I'd share that, and we'll see what tomorrow gives. I don't know if I'm going to trade tomorrow because I have some other things to do, but I want to get back in the habit of doing these recaps. Oh, yesterday, what did I do? I actually did a few sells here. Notice that was a limit order market, sold a bit, sold a bit, sold a bit. He had a wedge bottom over here. But it's not, the signal bars are not very good. This isn't very good. This is a better one, but it's at the moving average. So there are not very many good buys. He had a pullback and then he had his bull breakout, which was beautiful. I didn't get to watch it because I had to go somewhere else. But what's interesting, you have a wedge again, 1, 2, 3. So I sold this, came down here, and then I noticed that the fall through was so poor. And it looked like we were going to get another leg up, like 1, pullback, 2. At that point, when we started to go sideways, I realized, okay, we can't be going sideways. We should really get a second leg down, and we're not. This bull bar appeared, and I got out, and then this popped. Oh yeah, that was another thing. I realized that if we're gonna break this moving average, we'll definitely have a big bull bar, which is exactly what happened. And then this came back down. I thought, okay, this is an exhaustive sell. So therefore, this could be a good sell. I stupidly went short as it came down, and I should have just waited till it had closed. And that's the thing. Sometimes when I make mistakes, it's usually because I don't wait for the close. Um, yeah, I didn't wait for the close, and then it popped up, and I got out of my cells, came up here, bought this high because I went away, came back, bought this high, and we had this pullback, and I thought, okay, maybe the first reverse will be bought, but of course, it's a trading range day. Chances are we're going to come back and test this low, most likely test this low. Came down, had a wedge bottom. The wedge bottom failed, so therefore we're going for a measured move, possibly from here to here, somewhere around here. But anyway, broke through the wedge. It's very hard to see. It was easier to see on the tick chart. So this is the tick chart from yesterday. You can see we had 1, 2, 3. So I had a wedge here, and I think you can do the measured move better from here. Yeah, there we go. That's the measured move target. So anyway, we had the measured move, and therefore went lower. We had a higher low major trend reversal as a result of that. This is definitely a bear trap. So I actually bought some more here, traded this up to the moving average, and then decided to just call it a day. Then we now had this big pop wedge, which failed, so it's a two-legged correction here, and as a result, we had a second leg up. If I think there are 2 legs in here, you could probably measure a leg from there. It was actually longer than that. I probably got that wrong. Oh, I don't know. I'm trying to fit it. But anyway, so we had a two-legged correction, and then we had this. You have a lot of selling here, so chances are you're going to sell aggressively as well, which is probably why we've gone up, especially when you're in a strong bull trend like that. Any other thing? I don't. Oh yeah, I didn't. I think I talked about this. Did I? I think I talked about this in how I sold this. Did not get to my target, but I had to walk away. Yeah, so that's my recap for the day. I thought I'd use a dark blue chart as opposed to a white one today, only just because um, I've gotten tired of looking at the white charts for too long. I still have a white chart here. The white chart is easier to trade. It's just I get exhausted at this part of the day because I think it's just I start to strain my eyes, and then the other one's easier to look at, but I prefer. I see the pattern so much better on that. Also, it helped looking at the reverse chart today. That's how I got the idea of the two-legged move here, in the sense that once we had this wedge and we came up, I was like, oh, this looks like a major trend reversal. At least we're going to get 2 legs. The follow through wasn't great. You can see a lot of tails and dojis on the way down, so therefore you're getting a micro wedge here. This is actually a bigger wedge, and then trend continuation here. So this is a trading range as well. All right, so yeah, we'll see what happens tomorrow.